Good morning, folks, and welcome back to Almus Market Mornings. Now, it wouldn't be much of a weekend if there isn't much of a news from the US, especially from the White House. While it looks like the US government shutdown may be nearing an end, as reported by Bloomberg, there are a few interesting updates. The president dropped hints on social media that 50-year mortgages may be on its way. The current standard mortgage term is a 30-year tenor in the US. President Trump has also announced a $2,000 check for passing on the tariff income, even though the current legality of these tariffs are uncertain given the pending Supreme Court ruling. But it's important to understand how all of these would impact the markets. It all seems murky at this point. Morning, JQ, what do you make out of these weekend developments, and what's the key things to look out for this week?
Good morning, Swaraj. Yeah, at least the markets are starting on some optimism today in the new week. However, various news that's coming out should be taken with some skepticism. Shutdown, for example, is up to removal or spending bill being approved till 31st January only. So we might still have a similar situation later. And then the paychecks he talks about, rather the stimulus checks of $2,000 for families with lower income. So again, on the one hand, he is saying we are going to repay the debt, and the other hand, these types of expenditures will only add to the deficit. So something market will not take it as a real positive as well. 50-year mortgage, again, it's a very long period of liability for people. I don't know how far. That's something that I cannot take a view right now, but I think most people are quite skeptical about that. I think 30 year itself, 30 year is ideal, but I know there can be opinions regarding these. But in any case, market will take these news with both hands, particularly the shutdown period, because if you look at the data that has been coming off late from US, they have been quite, quite weak. On Friday, we had the consumer sentiment data, which is published by University of Michigan, the preliminary survey, which dropped to dropped 3.3 points, to 50.3. This is the lowest index, from June 22 onwards. So it's quite a drop that we have seen in the last 1 year. And that's led by mostly because of high inflation, as well as the shutdown, its impact, as well as the job market worries also. And a previous day, we also had the job losses which hit a 20-year high at 1,53 jobs being 53,000 jobs being cut in the month of October, the lowest since rather the highest since 2003 as well. And I think these numbers were going to be definitely on the negative side for the markets, but the overnight news about shutdowns being lifted is cheering up the market to some extent. If the shutdown had continued, estimates suggest that US GDP for Q4 would have been on the negative side. So it's also a political compulsion. Eventually both the factions of the Congress have to come to some sort of a agreement, and that is what is happening. Not too much bullish on the overall thing, which is just restoring the status quo before the shutdown happened. I think overall markets seem to be, kind of selling the dollar once again on, Friday after the data, but that has been slightly seeing some sort of a reversal now again. Yen is weaker. Euro again not able to break above 1.1580. So we were looking for euro to correct down substantially in the previous weeks, but at least it has not been able to penetrate the 1.1470 marks, and looks like we are going to spend more time in time consolidation rather than price consolidation. But eventually, we still hold our medium-term view of dollar being weak, because Eurozone data overall is seen to be improving. ECB's rates are on the possibly on the bottom, unlikely that they will cut again. Whereas in US they might well be cutting more. If you look at the numbers that are coming out, the Fed itself also might be changing its stance quite quickly if the job market continues to deteriorate the way it has been shown. So overall, dollar is not able to build on its gains. Strong resistance at 100.50 has not been broken on two attempts. So that keeps the dollar on the slightly weaker side. The very fact that gold and silver, they also rallied once again overnight, shows that the market is more impatient to sell the dollar on any news. Yes, we have the uncertainty about the tariff as well because of the Supreme Court hearing that is going on, and now the betting market is actually showing 80% chances that the Supreme Court will strike down the tariff as illegal. Although we all know that the US government will take shelter under some other legislation to impose tariffs, although that can take some longer period than what a current situation suggests. So there is a lot of uncertainty that is also there. Another point that added to markets optimism is China relaxing some more export controls on their key material exports. And this is, I think, this part of the deal that happened between the US and China 2 weeks back. So keeping the markets afloat, at least for the time being. On the Indian side, we have had the rupee, which is now continuing to trade closer to the all-time highs. The bias is still a little bit on the weaker side because the demand is still quite strong. However, the markets, at least the stock markets, seem to be, holding up well after, bouncing from, about 10% below the all-time highs. Although it has underperformed so far, I think looking at the way other markets have rallied, and now it looks like some studies suggest that Indian equities have lost their premium over the global peers, and particularly if you compare Indian stocks with in comparison to the US S&P 500, it is at a discount of around 20%. So possible that we have value buying coming into Indian markets, and that's important from the forex point of view because that can actually make the FII flows positive. So that is very essential because right now the demand supply mismatch is wide and negative, and that is what is being filled by the Reserve Bank as well. As we get into the new week, I think the most important number that I'll be looking at will be India's inflation. India's inflation is expected to show 0.5%. It's a record low inflation that we have seen. And although a lot of help is coming from base effects, we'll also scrutinize if there are other factors at play. So we will definitely be looking to see what the policymakers' reaction is with regard to this. It does look like we will have another rate cut in the next meeting by RBI because already since RBI stopped cutting, since then US Fed has already cut twice, so there should not be any negative impact on the rupee as well. So we should look forward to another rate cut from RBI, and that should also support the sentiment in our markets as well as the investments. Apart from that, we should be looking ahead to the trade numbers, the global trade numbers from India, which is again what impact the tariffs of 50% have had on Indian exports is something that we'll be closely looking at. Finally, as we draw to the weekend, this weekend, we'll also have the outcome of Bihar state election results, and of course, any major departure for either of the major parties in contention would have some influence on the market. But however, markets will probably take cues from the positioning, which seems to be on the lighter side as far as Indian markets are concerned, because a lot of people have been carrying skepticism for a long time, particularly the FIS, whose numbers have been on the negative side for over a year now. And I'm very closely looking at the FI activity in the coming months, particularly as we go closer to a new year. and the new year always sees some fresh allocations as well. Thank you.
Thank you, JK. And I think the key theme over here is that there are uncertainties which are there presently in the market, especially when it comes to tariffs, because it seems now the favored view, as per the people at least who are attending these hearings in the US Supreme Court, is that the court will sort of strike down the tariffs imposed under the IEEPA. But as JK mentioned, there are other avenues through which they can still impose the tariffs. But of course, this sort of update can create some sort of a messy situation now, whether the US government will need to refund the importers all the tariffs they have already paid. Again, all of that, those details would be closely looked at. Now, on the optimism side, of course, it's that the US government shutdown may be nearing an end, especially if the Senate passes the spending bill. But that would only be up till January. So we may see this sort of situation once again. But overall, that's the positive front through which markets seem to have a positive sentiment. Domestically, we need to look at India's inflation more closely. It's expected to grow only by 0.5%, which is significantly lower growth in prices. This would be important because it would give RBI some more room to cut rates. And of course, towards the weekend, the result of the Bihar elections will be announced, and that's something to look out for the domestic politics. That's it from us today. Thank you for listening. We'll catch up tomorrow with the fresh round of updates.